Welcome to the Crypto VIP Lobby, where we decode the complex world of crypto trading. Today we're going beyond the surface. Not just what spot and futures trading are, but how they really work. The mechanics, the risks, and the strategies professional traders actually use. So if you're ready to think like a pro, grab your coffee, because this is going to be a deep one. Let's start with the foundation, spot trading. Spot trading means you're buying or selling the actual cryptocurrency. When you buy one Ethereum, you own it. It's in your wallet. The mechanics are simple. Your cost, purchase price, X quantity. Your profit, your cost, sell price, buy price, X quantity. Here's a quick example. You buy 0.5 BTC at $40,000. That costs you $20,000. Later, BTC rises to $50,000. Your 0.5 BTC is now worth $25,000. That's a $5,000 gain. No leverage, no liquidation, no funding rates. Just straightforward ownership. But here's the catch. The only way to profit is if price goes up. Spot is bullish only. Now, futures trading is an entirely different beast. You're not owning the coin. You're holding a contract that mirrors the coin's price. This unlocks three superpowers. Leverage, trade with more size than your capital. Directionality, go long or short. Flexibility, hedge, speculate, or arbitrage. But with great power comes catastrophic risk. Let's say you deposit $1,000 USDT into your Binance Futures wallet. You decide to use 10x leverage. Your position size? $1,000 x 10 was $10,000. At Bitcoin $50,000, that equals 0.2 BTC in contracts. Now watch what happens. If BTC rises 5% to $52,500, your profit, soccer 0.2x, 52,500, 50,000, SOC for $500. That's a 50% return on your $1,000. If BTC rises 10%, your profit, FOCR $1,000. You doubled your money. But if BTC drops 10%, your collateral is gone. Liquidation hits. Notice something? A 10% move in Bitcoin equals a 100% wipeout at 10x leverage. To master futures, you need to know the hidden mechanics. Initial margin, the money you stake to open a position. Maintenance margin, the bare minimum you need to keep that position alive. Drop below this, and you're liquidated. Mark price. Binance doesn't use the last traded price to calculate liquidation. They use a fair mark price to prevent manipulation. Funding rate. Every 8 hours, longs and shorts pay each other a fee depending on demand. If funding is positive, longs pay shorts. If negative, shorts pay longs. This keeps perpetual futures tethered to the real spot price. Think of it like this. Spot trading is like buying a car. It's yours, you can drive it at your own pace, and worst case, its value depreciates, but you still own it. Futures trading is like driving a Formula One car. It's insanely fast, thrilling, and can win you the race. But one mistake, and you crash. That's the difference. Now you may be asking, why would anyone risk futures? Here's why professionals use them. Hedging. If you hold Bitcoin long-term but worry about short-term drops, you can short futures to protect your spot holdings. Speculation. Traders use leverage to capture small price moves without needing massive capital. Arbitrage. Advanced players exploit differences between spot and futures prices or capture positive funding payments. Used correctly, futures are tools. Used recklessly, they're weapons of destruction. But here's the reality check. Most retail traders lose money on high-leverage futures. Why? Because they underestimate risk. Liquidations happen faster than you think. Funding rates quietly eat your profits if you hold too long. Emotional pressure leads to bad decisions. The market doesn't forgive greed. So let's recap in one sentence. Spot trading is ownership. Safer, simpler, long-term. Futures trading is leveraged contracts, riskier, faster, and a double-edged sword. And that concludes today's deep dive inside the Crypto VIP Lobby. If you learned something new, don't keep it to yourself. Like this video, share it with your community, and hit subscribe so you don't miss the next session. This is your host, signing off. Stay sharp, trade smart, and welcome always to the Crypto VIP Lobby.